we're going to make the United States, the digital asset leader in the world. Digital assets are here to stay. And that's the Secretary of the Treasury. And if you think about every utterance from previous secretaries of the Treasury on this topic, right, that's 100 times more powerful than anyone in a like position has ever contemplated or uttered in the history of this industry.
Hey guys, welcome to Everyday Finance. Michael Saylor, a prominent supporter of Bitcoin and the founder of MicroStrategy, continues to emphasize the growing significance of Bitcoin in light of the fact that more and more cracks are appearing in the conventional financial system. The author investigates the ways in which the Federal Reserve's decision to raise interest rates, instability in the banking sector, and the growing fragility of fiat currencies are all converging to make Bitcoin more relevant than it has ever been seen before. Central banks, according to Saylor, are caught in a cycle of reactive monetary policy, which involves raising interest rates in order to combat inflation, while simultaneously risking liquidity crises in the banking system. It is possible that cryptocurrencies in general appear to be volatile. However, Saylor draws a clear distinction between Bitcoin and other cryptocurrencies, presenting Bitcoin as the only digital asset that is truly decentralized and uncorruptible. Saylor sees Bitcoin not just as a hedge, but as a necessary upgrade to money itself, digital, secure, and mathematically sound. This is because fiat debt is ballooning and confidence in central banks is eroding.
Well, I did have a chance to speak with the Secretary of Treasury at the White House, and he shared with all of us that he wanted to make sure that the banking system was able to embrace digital assets and handle digital assets. And they have a program of progressively, thoughtfully rolling back anti-Bitcoin rules. And of course, that requires guidance from many different federal agencies, the OCC, the FDIC, the Treasury. Also, the Federal Reserve has some influence on this. They were pretty definitive that they were going to find every anti-crypto rule, all the anti-Bitcoin guidance and rules, and they were going to reverse them explicitly as soon as they could in a programmatic fashion, almost like week by week stepping through that. So I thought that was profound. The other insight, Bonnie, that comes from that summit is that the Secretary of Treasury shows up and was so very engaged. And you also saw the Secretary of Commerce very engaged. And you also saw Kelly Loeffler, the Secretary of Small Business Administration, very engaged. So you had 3 cabinet members extremely engaged, in addition to David Sachs, the crypto czar. And maybe the most powerful financial regulator in the world, certainly in the US government, but maybe in the world, is the Secretary of Treasury of the United States, so Scott Bessent. And Scott Bessent had been viewed to be progressive and innovative when he was nominated for the role, but he hadn't said very much on the topic of digital assets leading up to that summit. And so Bessent showed himself to be very well versed, very progressive, very thoughtful, and deliberate, and supportive. And I think that exceeds everybody's expectations. We knew David Sachs would be supportive, and we knew the president was supportive, but you could imagine an administration where you have 1 or 2 members of the cabinet that are supportive, but other members of the cabinet that are simply moderate, and they want to move forward in a deliberate, thoughtful, careful fashion, and they would slow things down. But what I saw at the White House was I saw that everybody is supportive, everybody is deliberate. This administration is moving faster with innovative programs and decisive, courageous pro-business, pro-technology, pro-innovation programs. It's moving faster than any administration in my lifetime. You have to go all the way back to Thatcher and Reagan in the 80s to see such pro-innovation, pro-business, pro-freedom type actors. But even they, I don't think, moved nearly as quickly and decisively, and they didn't have so many intricate topics. So I really think this is like a once in 50 years, could be once in 100-year type event. And Besant's actions and his words, both before and if you look at the interviews that he's given after this summit, they're very clear. He went on the Laura Trump show last Saturday night. It was a show that I was on, he was on, David Sachs was on. But he stood there on camera in front of the White House and he said, we're going to make the United States, the digital asset leader in the world. Digital assets are here to stay. And that's the Secretary of the Treasury. And if you think about every utterance from previous secretaries of the Treasury on this topic, right, that's 100 times more powerful than anyone in a like position has ever contemplated or uttered in the history of this industry.
Bybit, a spot Bitcoin exchange-traded fund, ETF, that was introduced by BlackRock at the beginning of the 2024, has exploded onto the financial scene, capturing the enthusiasm of investors as well as the recognition of the industry. Bybit received a staggering $643.2 million in inflows on April the 23rd, the same day that it won the ETF Com Awards for Best New ETF and Crypto ETP of the Year. This was the fund's largest single-day intake since January. Over the course of just 2 days, Bitcoin exchange-traded funds, ETFs, collectively brought in more than $900 million, which indicates a surge in institutional interest. This spike was not an isolated occurrence. Bybit currently manages assets worth more than $53 billion, and it trades nearly 45 million shares every day, with each share priced at approximately $53.20. Notable analysts such as Eric Balchunas of Bloomberg believe that the momentum is well-deserved, citing the pioneering performance of IBIT as the reason. Even the HODL ETF, offered by Van Eck, which is well known for its clever ticker, was recognized for its branding. In spite of the fact that traditional financial markets are experiencing difficulties, these developments indicate a clear institutional shift toward Bitcoin exposure.
Yeah, so BMAX is an ETF that launched about a week ago. And there's a whole, one of the great use cases of Bitcoin is to put it in the middle of a capital structure of a publicly traded company. And if you have a publicly traded company, it causes your equity to be very volatile. So like my company's the most volatile equity out of the S&P 500 universe. Sometimes a volatility of 90 to 100. Well, when the volatility of a public company gets above 45, you can sell convertible bonds because convertible arbitrageurs actually are able to sell that volatility or extract it, and that pays the cost of the interest. So convertible bonds make sense for companies that have volatility, but if your use of proceeds of that convertible bond is to build a building or to invest in a long duration project, it might take 3 to 5 years before you know that the investment was profitable. So most companies that issue convertible bonds only do one and done. They issue a bond and then it's 5 years before they issue another one. And that's because their investment cycle is so slow and it's very heterogeneous. And the source of their volatility is normally uncertainty about whether the company will be successful. Most well-run companies, they aspire to get rid of volatility. For example, if you're a CFO, you would brag, we have no volatility on the balance sheet, we can never lose any money. And then if you have a P&L, you want to sign your customers to 3 to 10 year contracts with escalators every year. Look at Microsoft. No volatility on the balance sheet, 3-year enterprise agreements that roll over, and the CFO is renegotiating 1/12 of those agreements every quarter. And so you never have more than 8% of your revenue ever in play, and you can forecast out. So that's best practice of a conventional company. If a company capitalizes on Bitcoin, you could sell a $1 billion convertible bond. You could put the money to work in 1 week. You could announce that it was profitable the next week. So the investment cycle isn't 3 years. The investment cycle might be 3 days. Okay, then you could go back to the market. You could issue another convertible bond. You would make the same exact investment. The benchmark of profitability is whether you accrete Bitcoin per share. You could say, well, what if the market doesn't really care about Bitcoin per share? Well, the equity investors in a Bitcoin company care about Bitcoin per share. They've self-selected. So when you're on the Bitcoin standard as a public company, you can issue convertible bonds because you're going to have the volatility. You're going to have a very fast investment cycle. It's homogeneous. And you can actually create a set of metrics to describe whether it was accretive or dilutive. So my company pioneered that. We actually became the biggest convertible bond issuer in 2024. We're the biggest convertible bond issuer this year. We're so big that we're actually getting to the point where we're outgrowing the convertible bond market. And so the shorts and the cynics say, well, you can't keep doing that because you've outgrown the market. Well, and BMAX is the answer to the question, how do you grow the convertible bond market? The reason that the convertible bond market is a stable set of capital is because most of the people in it are convertible arbitrageurs, and you have to be a specialist. And so those bonds are sold 144A over the counter to specialists who engage in convertible arbitrage. But in fact, those bonds would be very useful to someone that wanted to be a Bitcoin investor, because those bonds historically, up until now, have outperformed Bitcoin. So if you wanted to actually buy a bond that performed like Bitcoin, maybe you want Bitcoin upside, but you want limited downside or a different downside exposure, you would buy a Bitcoin convertible bond. But you can't, because the bonds are only traded to qualified institutional buyers. So BMAX is an ETF that is actually plugging an over-the-counter institutional market into the general public market. So you could boil it down as to say, well, now there's a way for a retail investor to buy convertible bond exposure in Bitcoin-backed converts. But you could also say it makes it much, much easier for even an institutional investor, because they don't have to trade over the counter. Their over-the-counter markets are dark. There are wide bid-ask spreads. They're very inefficient. They're very illiquid. And so BMAX is creating liquidity, availability, transparency, and a certain degree of continuity. And I think that as instruments like that come out, right, I would say the most valuable ETFs, by the way, they're ones that let a retail investor or a diversified investor very quickly put 2% of their portfolio into something. Like, I want 2% in gold in like 1 minute. I want to own 2% of the real estate in New York City. You need a REIT to do that. I want 2% of Bitcoin, right? Or I want 2% of Bitcoin-backed bonds. If you have an instrument like that, it's differentiated. It really is doing more than stock picking. I'm not just buying 3 stocks in the ETF that you could have bought. I'm literally crossing the 144A barrier, and I'm buying an institution in an institutional over-the-counter market to make available to you on Robinhood. And so I'm excited about things like that. I think it's going to grow the convertible bond market. It's going to bring new types of investors to the market. I would say my company has expanded the market because we have found, in my opinion, one of the great use of proceeds for convertible bonds. What are we doing? We're building a digital building in 1 week. how many we're going to build. We're just going to keep building them, right? What if you could do 100 bond issues and build 100 digital buildings and just keep coming back over and over again? That's good for the investor. It's good for the market. It's good for the issuer, right? And BMAX is just part of bringing that idea to the general public.
The cryptocurrency known as Bitcoin is increasingly behaving like a flight to safety asset in the midst of ongoing macroeconomic instability, which is characterized by rising interest rates, sluggish equities, and uncertainty regarding tech stock prices. While major indices such as the S&P 500 and the Nasdaq have experienced significant declines over the course of the past month, Bitcoin has experienced a gain of nearly 8%. The analysts at Bitfinex have compared Bitcoin to the cleanest shirt in the dirty laundry, a reference to the cryptocurrency's relative strength in the context of a turbulent environment. It is important to note, however, that previous rallies have frequently been only temporary. Future economic indicators, such as the Consumer Price Index, CPI, data, and corporate earnings reports, will determine whether or not this momentum will continue to be sustained. Despite this, there are increasing indications that the structure of the market is shifting. Bitcoin is exhibiting signs of decoupling from equity markets and is moving closer to the behavior of gold, particularly as market uncertainty increases. As Bitcoin's dominance continues to grow and institutional ETF inflows continue to increase, such as the $913 million spike that occurred in a single day, there is a growing belief that Bitcoin is not merely weathering the storm. Rather, it is beginning to take the lead. Thanks for watching.